Hello and welcome to this video brought to you by the Institute of Certified Finance Technicians. The name of this lecture is How to Illustrate the Bookkeeping Process. First, we're going to look at our learning objectives, which we're going to split into our aim and learning outcomes. So the aim of this lecture is as follows: to enable the learner to understand the bookkeeping process. And that means that there is a start and a finish to bookkeeping, and you just need to know what are those steps involved in that particular process. So the learning outcomes are as follows: to enable the learner to describe the 4 stages of bookkeeping, of the bookkeeping process, and we'll go through those in some detail. And also this will be building on the previous lecture of how to contextualize bookkeeping. And also we're going to look at the ability of the learner to identify the link from source documents to a trial balance, because source documents are the starting point of bookkeeping. So we'll have a look at the bookkeeping process, and the image that's going to turn up next is one you're probably familiar with from the first lecture, but we're going to start off with source documents. And now what we need to do is look into a little bit more detail concerning what are source documents. We've touched on these before, but here is a list of items that would be source documents. It's not an exhaustive list, but it'll give you a kind of flavor for what source documents are. So have a look then at this list here. We have on this list sales invoices, purchase invoices, bank statements, petty cash vouchers, payslips, loan agreements. So let's just consider those individually. A sales invoice is pretty basic. If you are selling a product or service, it is the document that you issue out to a customer when you are engaged in a sales process with them. A purchase invoice is the document that you receive from suppliers when you are buying products or services from a particular supplier. Then we have bank statements, which would be a list of inflows and outflows of cash in relation to your bank account for your business. Petty cash vouchers are dockets that record small monetary amounts spent on particular transactions, and they'll also show lodgements of petty cash into the petty cash fund as such. Pay slips, again, would just be a document showing the amount of monies that are issued to your staff, less deductions made concerning taxation. Loan agreements could be the detail of monies that were borrowed from your bank in order to fund your business, with all the relevant details concerning the payback period, the interest rates charged, and all the other terms, conditions relating to that particular loan itself. So those are not a complete list of source documents, but source documents are something you want to get very familiar with, because they're the basic foundation of all bookkeeping records. It's all raw data displayed on source documents. Those source documents may be hard copy, or they may be in soft copy on a particular screen. So the next step we need to look at in relation to bookkeeping as follows: it's the books of original entry. As previously mentioned, these can also be referred to as the books of prime entry, because it is the first time that the transaction has been recorded in the books of account of a business. And books of original entry are simply lists of transactions, and there are a number of categories into which we want to list our transactions, and on the screen you're going to see a list of those. So we start off with the sales daybook, and that's pretty straightforward in that the sales daybook just lists all the invoices that have been issued by your organization to your customers in any given period. So let's just say for the month of January, you've issued 50 invoices. They'd all be listed there in sequential order. As we progress through the course, you're going to see what information would need to be recorded in the sales daybook, but the most basic would be a date of the transaction, the number of the sales invoice, the customer's name, and the monetary value relating to the actual transaction itself. Next on the list is the sales returns book. Sales returns book are items that are returned to your business by your customers, and again the similar information is recorded, and also it's all the transactions relating to a particular period that are noted in the sales returns daybook. Moving on then, we look at the purchases daybook. This is all the products or services that your business buys from your suppliers. Again, the information is very simple. It's all in chronological order. It would relate to a particular period. So let's say for the month of February, you have 70 purchase invoices. They'll all be simply in a list in the purchases daybook. If you happen to return any of your goods, you would be noting these in the purchase returns daybook. So therefore you can keep an eye on how much credit you're due back. The petty cash book relates to all items of money spent on minor expenditure related to your business. So for small amounts of money, you would record those transactions in the petty cash book. The cash book really is relating to the bank account of the business, and it shows the inflows and the outflows of monies from to and from the actual bank account itself. And the general journal is just a catch-all document whereby all other transactions are incorporated into that particular document. As time progresses, you'll be expected to actually fill in the numbers in these particular daybooks. But this is all you need to know at this particular juncture. You now know that the source documents feed the raw data into the books of original entry. After the books of original entry have been complete, we need to consider the next step, which is the books of double entry. And the books of double entry are quite straightforward. They are recording financial transactions, but in a very specific way. They're using a process referred to as double entry. And double entry is the business of debiting and crediting transactions. We will look at this and get you to record transactions as we progress through the material. But let's have a look at this then. So books of double entry are records of financial transactions recorded using double entry, comprising of ledger accounts classified into any of the following categories. So that can be transactions relating to assets, transactions relating to liabilities, transactions relating to income, and transactions relating to expenditure. So in one respect, it makes things a little bit easier for you if you take on board that there are only 4 categories into which these accounts fall. And those are assets, liabilities, income, and expenditure. And we'll see how that plays out later on when we look at individual transactions. Can you distinguish which one goes into which category? But the books of double entry are really important, at the end of which we're going to close off the accounts and we're going to seek to find out what the balances are on each individual ledger account in the books of double entry. And when we do that, we're going to move on then to the trial balance. And in order to just explain the trial balance, we're going to just look at a kind of definition here. It says that it's a list of balances detailed in the books of double entry accounts. The balances are presented as debits and credits. So it summarizes all the information. The trial balance summarizes all the information contained in the books of double entry by extracting the balances of each individual account. And what's important is to understand what's written there on the slide, where it represents that the debit balance represent assets or expenditure balances, and the balances on the credit side represent income or liabilities. By having a clear understanding of that will make it much easier for you to understand financial statements when we move into that particular area. So it's hugely important that you have a very good understanding of the 4 steps involved in the bookkeeping process. So in summary, we just need to say that the start of the process is source documents, moving on to the books of original entry, where the data is streamlined into different categories. Then we used a system of double entry for the books of double entry, and then we extrapolate the balances of those as a list in the trial balance. Now that's quite a lot of information that's contained within that particular infographic. You want to make sure that you're very familiar with it. And in order to test that you've understood the material in this particular video lecture, it would be helpful for you to have a look at the microtask. And the microtask is noted as 02BKL1 bookkeeping process microtask. So what you need to do is have a look at that particular quiz, answer the questions, see how many you get right. And the ones that you do not get correct, make sure that you look back at the video and figure out why you had a wrong understanding, because it's very important to get great clarity at this particular juncture of the course. That concludes this video. Thank you for watching.